Champ, I've been an entrepreneur since 9th grade in high school. That's over 30 years plus. And I've been a real estate investor since 2006. And I can tell you this, that in my opinion, is suicide to be a fix and flipper. Now, let me put a disclosure out there. I'm not a financial advisor, nor have I ever been very fond of fix and flipping, but I do think it has its place. But in today's market, what's happening in the stock market in my mind is the canary in the coal mine. That lets you know in the next 6 months, another 10, 12 months, the probability of the real estate market crashing even harder is coming, okay? Now, there's a lot of ways the pledge protection team can, do his magic to eliminate this. We've seen it with negative interest rates, which is, I've never heard that in college. We've seen it with, bailing out millions of people in forbearance programs during COVID. We've seen all kinds of, free money giving out to everyone. So there's a lot of stuff these guys can do with their strings to prolong it. But I think that, as I've talked about many times before, that the second layer, which is the monetary system, the fiat, the Visa, the MasterCard, the Swish system, is the secondary layer. And the primary layer is the actual commodities or the products that are made from these commodities. For example, the rice, the oil, the fuel, the this, that, okay? That is more important than the second layer, which is the fiat or Visa or Swiss banking system, etc. Okay, and what we in America control is the second layer, right? These other countries are the one who are extracting their natural resources in commodities, or if it is from coffees, if it is from whatever, clothes or products, whatever, China. And as you can see, that this transaction is now coming to a halt with the tariffs and back and forth, kinetic energy exchange all around the world, which is amplifying in multiple dimensions, multiple hemispheres. And so that's going to boil down to, hyperinflation. That's going to boil down to shortages of products. That's going to boil down to a lot of stuff, right? And this is why I would hate to be a fix and flipper, because fix and flipping itself is very, very marginal in profits, even in a good economy or average economy. And in today's market, you don't know what's happening. Like gold used to be in 2016 $1,100 per ounce. Today is over $3,300 per ounce. So look what's happening, okay? Look at the cost of eggs, or the cost of watermelon, or so on and so on, or one-bedroom apartment, or so on and so on. Now, when you realize that, and you realize, oh shit, to be a fix and flipper is a horrible situation, because I'm dealing with the what if factor, the fudge factor. Like, what if I go down through these walls and I find a dead body? What if I do this and there's plumbing, or there's leaks underneath the slab, or there's so many variables, and whatever you think is going to cost you is going to be a lot more. However you think it's going to take you to fix and flip this property, it's going to take a lot more. And that's just the nature of the game, okay? Now, to be in this season where, we're going into a crunch, we're having massive amount of people borrowing money, inflation is hitting up, the products coming to America are coming to a halting, slow down, at the very best I can say is slowing down, or it's going to be so expensive, then you can see that fix and flipping is not a good thing. Now, the solution, in my opinion, our financial advice, is being a landlord, okay? The landlord has two benefits. It has a lot of benefits, but the two that I want to focus on right now is that the asset itself, okay? For example, you buy the house for 100, in a few years, they're printing so much money, they're doing this, they're doing that, wars, this, the asset itself is worth 300, okay? So it's, what I say is inflation proof. The other thing that makes rental properties inflation proof is the monthly cash flow that is splits out, right, every month. Okay, that's inflation proof. For example, back in the days in Valley Ranch, Texas, a 1-bedroom apartment when I was in, high school or college would be $500 a month. The same exact apartment, same exact community, same exact unit, now it's $1,500, $1,600, $1,700 a month. So the point being is that rental properties not only protect your asset price, but they also protect the monthly cash flow that it splits out. In my example, 1-bedroom in Valley Ranch, $500, now $1,500, $1,600. Okay, so this is why I like rental properties. There's a lot of reasons, but one of the 2 main reasons I like rental properties is because so far it's going to protect you from the inflation of Big Brother, right? From whatever, all that funny math they do and all the funny wars and all that good jazz, right? Not only the asset, but also the cash flow. I mean, there's many other reasons why I like rental properties, because they also allow you to have a lot of buffering. So if you make a mistake, you think the property's worth this, and you ended up realizing it's worth less, you're not selling. Okay, another good reason why I like rental properties versus fix and flip is because when the market season changes, right, you're a fix and flipper, you just got with your pants cut off. You spend all that time, energy doing this deal, and then now the market's down. You're going to have to eat it. Or if you don't want to sell, which most likely you have to because you use hard money lending or some other private money, you're going to lose, thousands of dollars, simply put. As a landlord, you can sit it out. If there's a crash, so what? I'll just keep renting it out. That's the good thing with the real estate crash or any kind of crash. Usually you can participate in the crash, which means let me sell it when it's at the bottom of the bottom, right? And lose equity. Or you can, what can you do? What I do is just set it out, just like with Bitcoin. When the Bitcoin market crashes, instead of selling and panicking, I say, hey, this is cyclical. It's gonna go like this, like this, like this. And where am I at right now? I can just chill and hodl, just hold on to it, okay? And same thing with the rental properties. But if you're a fix and flipper, you didn't use your own cash. Let's say you use hard money, private money, your family's money, your cousin's money, your own savings. You were depending on this money coming back at a fast velocity, a fast speed. Well, guess what? The market has changed. Now you're gonna have to take a haircut of $30,000, $40,000 on top of what you spend fixing and flipping, plus your holding, plus all the labor, all that good jazz, dude. This is why I don't recommend being a fix and flipper, especially at the tops, the peaks of the market, because who knows when it's going to crash. Not saying that the way the Big Brother is set up, the Federal Reserve is set up, they could do all this funny stuff like negative interest rates, right? Never heard before, but now we have heard about that. All right, anyways guys, if you're interested in finding some great deals locally and you want to go on the fast track, then consider joining my Paladin Brotherhood, where you get access to all my courses plus monthly coaching for one-time fee, a lifetime access. Okay, if you're ready to just dive in and do deals ASAP and work with me direct, then join my smart coaching program, which is profit sharing, and and it's called Let's Do a Deal. Right? And I'll work with you on as many deals as you want, and we'll split the profits. I'll take a small amount, you take the lion's share. Anyways guys, thanks for clicking the like button. Don't take no for an answer, and always remember what Romy said. Always remember, you're braver than you believe, stronger than you seem, smarter than you think, and twice as beautiful as you ever imagined. Peace guys.